Exactly. We're going to talk about Nvidia today. And a day where the market is getting absolutely crushed. The reality is, especially the NASDAQ getting crushed, the reality is there are going to be situations where you find yourself liking a long position or you want to buy at a certain level and you're going to take the loss, right? So there's a very small possibility that you could have taken longs at various places in Nvidia and made money today. So what do you do when you're going to be against the trend? I can't know that it was going to go down. If I had that crystal ball, I wouldn't have gone long in the first place. But I want to start by thinking about where we're structuring this trade in the first place. We talked about this in yesterday's trade, that Nvidia had this 306 top on the 15-minute. It was a bit of a double top. I'm just highlighting the last couple of sessions so you can see the failed break it had at 306. That's important because the nature of the dip buy to start out is going to get tempered by this. So when we don't make that break at 306 off the top, we're essentially rejecting a level, a resistance level. And when that's the case, and I'm going to do a dip buy here, I'm always looking to scalp out in front of that breakout price because usually that's two separate trades to me. And that means no matter what, when it does come into that 300 level that I look to dip buy off the open, I was never thinking on holding it through more than $3 to $5 worth of profit in that particular case. So it does come into 300 as usual when I'm looking to buy on a dip off of a level that I cannot say is strongly supported anywhere when I go and pull up the higher time frame. It's just off that 300. I'm looking for it to bounce first. It fades in, gets pretty close to 300, bounces. I end up getting 301 on the way back up. Just looking to play the momentum there. As I said, looking to scalp it out in front of that high. It goes about halfway, gets some out. But then guess what? 300 breaks and I'm out of the trade. Again, didn't have a key level at that price level. It was just about the 300 level. So I had a target. I was able to get some out for a winner. We're still up on the day because we took our pain, we took some profit, and we took our pain for the loss. The key thing here is, at this point, it's easy to say, oh, I like the long, let me just find other places to get in, but you can't. You've got to see that falling sword and then start thinking about where is it safe to get back into it. Now, looking back where there was support on the 15-minute, the next level I like came into play. A heck of a lot faster than I anticipated, which sometimes is telling you a bit of something here. We got right into that 94, 95 range, technically a 93 bottom in there. And you're going to see a couple of entry points in here and then just taking the pain when they break out the lows. This is what you've got to be able to do. You're looking for the bounce. You get a consolidation bounce in your tight range, and then you get an entry point. It never even breaks out of the range. It breaks the low out. It holds the bottom here again at that 93, the absolute bottom on the 15-minute. It tries to bounce through, cannot again break out of the cycle, and then takes out the low. This is where, on the live show, I even said to myself, oh my goodness, why didn't I reverse to the short? Now, I can't say 300 short was something I would have been looking at, but when I popped the 15-minute chart, there was a gap to be filled below that 293. So one of the toughest things to do is to go short in a company that you like a lot of times, right? Especially at a level that you think is worth buying in the long term or is a good support level. But other times, you got to look at what's going on. It had traveled down a lot faster than that support than I had anticipated, meaning the selling was stronger. It then took out a level where there was a vacuum below on the 15-minute on the higher time frame chart. And I'll tell you right now, if you were watching this, both when 292 broke and when it broke this 288 level, you don't see the bid evaporate quite as fast as I did see here today. So I'm thankful, A, that my stop got almost no slippage when it took out that 93 bottom. But the other important thing is I know I learned a lesson. When there's a gap like that in a key level, you got to be able to reverse. One of my resolutions for this year was to be able to reverse shorts into longs when I have a good level. And then here, when there was a short available, because it was Nvidia, didn't go ahead and do it. So this is how you structure your trade so that you can mitigate your losses, take what little profit might be there when you counter trend, and then don't get yourself shut down or blown out on a single trade. There weren't a lot of ways you were going to make money on Nvidia today unless you knew 283 was going to be the bottom. Even then, there are ways to be able to survive and structure your trades so you can live another day.